All right, let's dive into the Coinbase report today. This could be the news that the crypto market has been waiting for. Is the big giant awakened and responded to what's happening in the space? We're going to dive in deep. My name is Paul Barron. Welcome back to TechPath. Coinbase, you know them as the one, the only, the titan in the exchange side of the cryptocurrency market. A lot of people wonder, are they going to make money? You know, the stock price, I'm in, I'm out. What's it going to look like? Well, I think Coinbase answered all the questions to a T after their fourth quarter earnings, and it really shows up in some pretty amazing numbers. Coinbase reports sharp revenue and user growth in Q4. Now, of course, granted, remember back in November, we had a big run up on Bitcoin. It was a thing called an all-time high. And of course, Coinbase had a chance to really capture in a lot of new revenue and also a lot of new users because of it. But the exchange trading volume hit 547 billion, nearly 70% quarter over quarter increase. I don't care what sector you're in, when you see a 70% quarter over quarter, this is not quarter over or year over year, but quarter over quarter increase in any business, that is either an absolute rocket ship or something is happening in the space that's causing these massive moves. Now, you could argue that there are some big things happening in cryptocurrency on a global scene. Sure, yes, we argue that here every day. But to see those kind of movement numbers, pretty impressive. I want to break down a little bit more of what they're talking about. Assets on the platform grew from 255 billion to 278, so not a lot when you think quarter over quarter there, but still a pretty significant amount. They also ended the year with 114 million monthly transacting users. That's large. And if you look at, because remember, this is only one of the major exchanges out there, whether you're using FTX or you're using a crypto.com or a Coinbase, the fact that they have 11.4 million users, pretty big numbers here. And of course, whom both invested and engaged in non-investing product, total verified users grew to 89 million. That's big. And then the trading volume, 547, which we talked about a little bit there, fourth quarter up about 67% from 327 billion in the prior quarter in 2020. So that's, to me, I look at these numbers, no matter what analyst, I'm surprised that the stock did not really react much better. Even more so, I think the market, in essence, when you look at the overall growth of Bitcoin and cryptocurrencies in general, these are some of the bullish indicators that really show out in a good way. So continuing on with what is going to happen during all this, just remember that their staking, NFT, decentralized finance products are going to be among the offerings driving diversification. This is something they've been trying to do over the past year or two. And then also they revealed in October that it would launch the NFT marketplace, allowing users to purchase and mint, which we know that, and we talked about that here on the show before. The other aspect of this is going to be this right here. ETH staking yields could double after the Ethereum network merge, Coinbase estimates are made. And what they're talking about here is a message sent to clients and shared on social media. Coinbase noted that after the Ethereum's mainnet merges on the Beacon chain, which is kind of the phase one approach toward ETH2, a move, it says, that's expected around June of this year. Big deal, June of this year. That's only about 4 months away. ETH staking yields could rise as rewards will incorporate net transaction X base fees currently paid to miners. Remember, as we see Ethereum shifting from proof of work to proof of stake, all of those miner fees will start to find new homes, and this could be one of the places that we see it. Coinbase estimates that the current ETH staking yields could be between 4 and 5% and should go upwards of 9 to 12%. This was in a tweet right here of Jacob Frenick. I'm just blown away by this number. 9 to 12% on ETH staking yields on Coinbase would be, this one would drive ETH absolutely parabolic. And two, I think it would bring a lot more people into the space looking for some of those blue chips that have those overperforming indexes around yields. Because remember, Bitcoin doesn't necessarily pay currently those kinds of yields. You're getting maybe 6% if you're on the outside, you're accredited investors on some platforms, things like that. You're not seeing these kind of rewards really out there. So I think that is going to be a pretty big advantage. Now, jumping to the Beacon chain, because I want to talk about that real quickly. Beacon chain is a proof of stake blockchain currently running alongside the original proof of work network. Now, remember, ETH is building 2.0 literally from a scratch. It's essentially trying to do a heart transplant, so to speak, on Ethereum 1. And that is where the beacon chain comes in. And when you look at this, which I thought was interesting, staking 32 ETH on the network allows users to effectively become validators. And then on it, in returns for their funds, they help secure the network, of course. And then the funds on the beacon chain are locked until the launch of ETH 2.0. So again, this goes back to the whole idea of proof of stake, when that merge is going to happen, and then also what those potential rewards could be. So if Coinbase has something on the waiting in the wings for something like that, it's going to be pretty interesting. Another thing that really is, again, leaning into more of a bullish sign here is Bitcoin investors buy the dip. Obviously, pretty much everybody watching this channel, I'm pretty sure most of you bought that $35,000 Bitcoin and or bought some of that Ethereum at one of its lowest prices that we've seen in months. But right now, as we see this gaining 16% in the last 24, this is the big one right here, and this is investors bulking up on Bitcoin holdings. I want you to look at the blue chart right there. That is representing the Bitcoin addresses with a balance greater than 0.1 Bitcoin. This comes over from Asari. Look at where this was just in July of last year to where we are right here this year, almost 3.3 million. Let me see if I can zoom up on that for you guys just a little bit. 3.34 million addresses holding 0.1 Bitcoin. That, along with what we've seen in terms of price volatility, shows to me the long-term opportunity here that resides in cryptocurrency, especially in Bitcoin. So a lot happening there. I like these numbers definitely when you consider what the all-time record high of 9.5 million addresses was. This is the latest data, of course, coming from Coinmetrics. Meanwhile, the number of addresses hold at least 0.1 also reached the 3.34 million, and first time in history. Big numbers here, and I like to see these kinds of movements. On the whole, Bitcoin's network added a little over 24,000 addresses with a non-zero balance on Thursday. This was coincided with Bitcoin's choppy price move. So again, I think that was because it was such a great price at the 34 to 35 range. You had a great opportunity to really jump into an asset like this, because many people were asking me during kind of the bloodbath we were seeing on Bitcoin, is this a good time to buy? I'm no financial advisor, but what I was doing was trying to grab as much as I could with dry powder to get back in there and see some potential opportunity. Because even if it were to go and break that 35,000 support level that we had been talking about, Evan and I, earlier this week, even if it did break that and we saw Bitcoin moving into the 20s, high 20s, or even at that low case of 25K, the opportunity of dollar cost averaging in that area is still a very good approach, at least in my opinion, based on what I do with my own strategies out there. Now remember, we do these market movers. We're going to give you these kind of aspects from both a research standpoint. We're also going to showcase some of the sentiment. Now what we're going to do today is a little different. Remember though, no financial advice. The idea is to give you some research, give you some of the data that we do to help our decisions get made. Hopefully it helps you go in the right direction. We are going to show you the CPI data, which is our crypto power index. If you guys have not checked it out, make sure and click the link below. You'll get a chance to either jump into it. It's a monthly fee for access. The way it works is we drop in sentiment every week. We have a new feature that we're going to start adding for the weekend. And because we see so much volatility on the weekends, the idea is, and we've continued to track these things, we're trying to get to the point where we can do daily sentiment on the big boys and on the overall markets. But at this point right now, we're dropping on Monday, and now starting today, this Friday, we're dropping a new sentiment for the weekend across the major markets and Bitcoin and Ethereum. So you'll see that today for the first time. And then of course on Monday, you'll get the new report. If you're a member, you can log in and see all these things. So good stuff. Another thing here, this is from Cabot Wealth, why investors should buy the invasion. I thought this was an intriguing look back at the history of world wars and how they affected markets and what those markets did in post the scenario. And if you look at what they're talking about right here, is you go back here to the Vietnam War, buy the invasion, and where that market went from 1964 through really, looks like around February of 1966, even with that dip right there in August of 65. again, that's going to be kind of that war news cycle that you end up. Obviously, we saw Gulf War, Afghanistan. That one was a bit different. And then Iraq, and then the Crimean crisis that we saw, of course, with Russia invading Crimea. So I think that, and we are not looking at this as an opportunistic aspect. What I want to do is help understand, at least for me, when we see a global stage of what's happening, in Europe right now, how does that affect these traditional markets? And in many cases, these are, in most cases, you're dealing with your life savings, you're dealing with scenarios that are very serious to you. So you have to make yourself aware of everything that's happening in the space. You can't just assume, if you're an investor or you're looking at investing for your family, your companies, whether you're a private office, or even if you're an institutional investor, you have to take all these things into consideration. So it's very important to still make a good understanding and a good assessment of all data that's available to you. In looking at the Coinbase report, I want to zoom in on this one right here just a little bit, just in some of the numbers. This came in from their shareholder letter right here. Cool metrics. Whoa, there we go. MTUs, which basically is a retail user that's using multiple aspects of a particular platform, went from the outlook of 8.0 to 8.5. The 2024 was an 8.4 million. Average transaction revenue per user, high 50s. Now we're at the 64 range. Mid-teens to still at a higher teens at 17%. And then tech advancements, approximately 1.4. They're still holding on that, so that's good on their maintaining expenses. All that was good. Select key metrics were very impressive right here on the transacting users, the MTUs. Again, 2020, 2.8. 2021, 11.4. That tells me lots of activity, lots of transactions, good numbers here. Trading volume, though a little bit, I think in terms of expectations, and I think volume will still be subjected to what's happening in the markets. But right now, 193 versus 1671, I think that is in billions. That is pretty impressive right there overall. And then, of course, net revenues for 2020 versus what we'll see in 2021. I mean, look at that. That's 6x. That's a pretty impressive state of condition. And I think we will continue to see pretty significant and continued growth of where this is going. And obviously, we're looking at 2021 estimates around a $2.3 billion total market cap for crypto. I think we definitely will hit 2.3 this year. The likelihood is we could edge up near the $2.5 trillion mark. If that is and does occur, it does mean that Bitcoin and Ethereum are most likely starting to move again. More stuff here that I thought was really interesting, and that is their unique monthly buying wallets versus monthly NFT sales. Interesting right here on the unique wallets. That's the blue line. And then the monthly NFT sales, we're starting to see this kind of movement in really in an upward line, a little bit of volatility. But the fact that we're continuing to see wallet growth, again, just further solidifies where this market is going. And I think a lot of people always are asking, where will this go? Will we see Bitcoin really start to see struggles? Sure, there's going to be some up and downs. It is a volatile market. It is a volatile asset class. You have to be aware of that. If you're following our channel, you're already in that mindset. This is the first thing as a crypto investor or as a crypto enthusiast. Even if you're following it, try to get ready for your investment strategy into cryptocurrency or other crypto and digital assets. The first thing you have to overcome, and this is the thing that I tell everybody, is you have to be ready for volatility. Volatility is a common every week experience, even in the bull runs, because when you see a bull run occurring and you see some quick flash crashes of even a 5 or 8 or 10%, you wonder, is that the end? In many cases, that's where great traders and also great investors are made. And in these markets right now, what we're seeing with Bitcoin at really a very low, it hasn't hit its low of 29 like we saw last summer, but if it did, and even at 35, still a great opportunity to jump into some of these assets, because these things are definitely going to be flying. And this was an interesting quote over from SBF, Sam Bankman-Fried, who is the CEO of FTX. And what he's talking about here is Bitcoin's volatility as fear grips the global markets. Now, you would think just looking at that headline that he's talking about, well, is it, war? Is it the global unrest with countries? Are those the kind of things that we're really facing? And what he's talking about is really a different scenario. He's talking about, says the recent price volatility of Bitcoin is caused by a tug of war between two different classes of investors. And he goes on, and he's talking about pull going on between fundamental investors and algorithm followers. Now, this is the scenario that what we're seeing even within our own data and also in the fundamental investors that are trying to go after this, because most of the time people, if they're a fundamental investor, will often miss the movements that these algorithms are essentially revealing. In many cases, the good traders, if you're on Wall Street and you're a stock trader, you're following algorithm data. You're following sentiment and market data. In very few cases, and of course with stocks, you do have that ability to look at the fundamentals on a much more regular basis. That unfortunately does not exist in the cryptocurrency markets unless you're starting to read tea leaves, because I think you have to really dive into a lot of layers to understand what those fundamentals might mean, as opposed to what you see on the Wall Street, because you're seeing traditional earnings calls, you're seeing all sorts of data that's being dropped, you see market activity. To a certain extent, we do see manipulation, we know that, and the way that they're doing it is through algorithmic trading and also the data and AI aspect of where this is all going. The point I'm making is data is definitely going to be the long play here as we start to see things move. Further into executive joins, this is an interesting one right here. And this one is a Goldman Sachs, longtime Goldman Sachs executive joins crypto exchange Coinbase. Now, this is very interesting because it's Roger Bartlett, who is the latest to exit Wall Street in favor of a move to crypto. By joining Coinbase, this is a 15-year tenure at Goldman Sachs, and he was a managing director and the global co-head of operations for global markets at Goldman Sachs. He's made the move and gone to the dark side, and that is working for Coinbase and understanding what global markets are in the financial landscape is a big, big deal, especially because of where crypto is right now. If you are sleeping on this market, it's not good. Unfortunately, if you're in crypto, it is a 24/7 market. You're watching charts. You might be looking at things on the weekends, in the nights, late hours because of the Asian trading markets. What we're seeing across the industry right now is a massive move from traditional finance into this space. And I think these only further what we're talking about here. So big deal here. Coinbase also launches support for NFT gaming altcoin as crypto markets tumble. And this is, again, another big reason I think that Coinbase is going to lead out. Now, I don't necessarily believe that Coinbase will be the winner in terms of the exchanges. I think they'll be one of. But I feel like there's a lot of other exchanges that are moving in the direction of really competing at a global scale. The advantage that Coinbase has is they're still mostly US-based customers, and we are highly underserved in terms of our adoption in comparison to other countries. If you compare something like an FTX, Bahama-based, if you look at Singapore-based Crypto.com, if you look at those, they're dealing with different scenarios. Then you have KuCoin, which is also international based. They can deal with different kinds of aspects of trade, coins, different investment opportunities that are quite different than the aspect of what SEC regulated Coinbase is dealing with. So though I think they will lead out, the advantage will be is if we see massive adoption here in the United States. If that actually occurs, then yeah, we're on to something pretty big. So further into the story, as you can kind of see, new tweet, Coinbase says the interactive game My Neighbor Alice, we talked about them before here on the show, now coming on to Coinbase and Coinbase Exchange in the regions where trading is supported. Trading is not enabled at this time. Trading will begin after 9 p.m. on Thursday. So again, Alice coming across the pond into Coinbase. This will be good for all games, and I think we'll see more of a few games starting to really show up on Coinbase, because remember, in most cases, Alice has been one of those projects in the gaming community that you've really had to go outside into some exchanges that maybe you're not familiar with. I mean, sure, maybe they have an MBA or an MBS, I think it is, which gives you the banking license, companies like Pionex, where you can get Alice. Others that are out there like a KuCoin, But you had to go to a lot of different places, and I think a lot of Coinbase customers are starting to look elsewhere, and that may be one of the reasons that Coinbase is going to continue, I think, moving in that direction, because they've got to be able to understand what the global market wants and also just what the US customers are wanting, because the opportunities are real in some of these emerging games, emerging metaverse, and also just in general, some of these startup projects that are really starting to, I think, get a lot of air. All right, so let's take a look at the current chart and we'll get a look of where Bitcoin is holding. If you look at the 1 day, obviously the big ascension right there after what we saw with this massive dip right there at 35,000. Hopefully you got a chance to buy this little cup right here, and we've seen nothing but upward trend here since that time, of course, with Bitcoin holding in right there at 39,599 as its high over the last 7 days. So that 1 day movement still holding a little bit of very solid for a Friday, and that is what makes me look at this and wonder, how is this going to hold up for the month? And will we see Bitcoin kind of jump back up to its monthly high, which was right here on February 10th at 44,009. We almost saw the 45,000 number come in. And I think as we, right there, 45,387 come in. And I think as we look at this right now, this I think is that kind of dip that usually indicates some pretty big volatile movement, but also could be an opportunity to see some movement upwards. So I wanted to jump to the CPI. And just as a reminder, as I said, when you go to our website, you're going to see the Crypto Power Index up there in the top. If you are getting into it, jump into, these are the features and all that good stuff. But if you're already a member, then you just log in here, go to your library, and you're going to find all your different products here. You want to get into this one on the index. And as of today, we're going to start dropping sentiment on the weekends or Fridays before and giving you guys access. So what you've got here is the previous date that we've got right there on 2/21, where we saw a little bit of movement. I think a lot of this was depending on what was happening on the global stage of seeing a little bit of downtrend. The orange line, of course, is Bitcoin holding in at a 70.98 versus a 69.56. So just in the week, we've started to see the upward trend on Bitcoin. And if you look at the overall right here on Bitcoin, it's starting to hold in very tightly, with the overall being the white line and Bitcoin starting to perform pretty significantly. Ethereum, same kind of scenario, starting to really track on the overall. And then you've got altcoins actually running a little tighter. So I think altcoins are actually trending a little tighter right now. And then Metaverse, which is actually overperforming overall and has been for several weeks. It gives you a 12-week running cycle on all the sentiment data that we pull in all the different categories. So right now, almost 8,000 projects get funneled into this. And then you've got DeFi, also a little bit on a downward trend, even though it did hover this week, but it is on a downward trend from its kind of 3-week high right here back on February the 14th, sliding back into 68.42. And I think the reason for DeFi not seeing the kind of opportunities has just been the opening of all of these rewards products that are rolling out in all these different scenarios. We've seen Nexo get into the game. Forget about the United States market for a minute and look at what the rest of the globe is dealing with. There's a lot of rewards that are out there, whether you're dealing with Celsius, Voyager, Nexo, even to a certain extent, all of Crypto.com's benefits in terms of rewards. All of that, I think, are playing into the cycle of people who are not interested in running into these riskier DeFi projects, and they're willing to park in these major exchanges and or major service models like a Celsius or a Nexo, and be able to grab those rewards on that anywhere from a 3 to, in some cases, upwards of 12 and 13%. So especially with USDC or even some of the more select assets like a Polkadot. That in itself, I think, is affecting a little bit of the DeFi market. So when you look at the overall, again, charts are looking pretty good right now. If I'm leaning into the weekend, the likelihood, again, a lot of this is going to have some volatility. If there's some crazy things that we see on the global stage, that's where we have to start looking at real-time data on sentiment and where this is going. We are trying to get CPI to you guys on a daily basis. I can't promise you when that's going to occur, but right now we are going with at least Bitcoin, Ethereum, and the overall markets to pull into these numbers on Mondays and Fridays, which are right now two of the key dates for prepping up your investment strategies as you go. All right, you're listening in over on the podcast right now. Best thing to do is see all these kinds of charts that we're going into, the analysis. Jump over here to the YouTube channel. It's the place to go. And of course, subscribe and like a video or two. Give us some comments. We love to get your feedback on what you like, what you want on the channel. And of course, if you want to reach me, it's out on Twitter at Paul Barron. We'll catch you next time right here on TechPath.